Welcome to Morpheus Trading Group. Today's technical setup is for KLIC and Sofa Industries, ticker KLIC, again ticker KLIC, and we're going to discuss an entry technique we use following a major breakout to new highs by when a stock breaks out to new highs. Now with KLIC, you'll notice that for many months, 5-6 months, KLIC moved in a sideways consolidation pattern as it just meandered above and below its 20 and 50 period moving averages. It never really got less than right around $8 a share, and it never got higher than about $10 a share. It traded in a $2 trading range for a very long period of time. And by the way, it traded in this range after a breakout move here from previous consolidation zone here. This was called consolidation. This was the breakout move. That was a prior move. Now, what we look for is during a breakout, sometimes you don't catch the breakout for whatever reason. You don't have an alarm set to tell you that it's broken out, or you just missed the trade. There's plenty of stocks out there to miss, let's put it that way. We have a big breakout. Well, if you discover this breakout and the stock has already rallied this much, it's come from $9 and it's now up at $11.50. It's kind of does not make sense to try to jump on the bandwagon because you don't know where it will turn. I mean, it could have broken out and on this day consolidated and eventually just pulled back into the 20-day moving average. It could have happened this day. You don't know where it'll happen, and when you chase things, the tendency is then you get in on a day and then it reverses on you, and the stock is against you, and you panic and you get out. So to avoid that situation, what we look for is when we have a breakout, the stock runs. We don't try to jump in. We wait until it stalls. So right in here, KLIC was unable to break the new highs. It just chopped around in this area. It stalled out. And then what happened is it began a slow descent or pullback towards its 20 period moving average. In essence, the stock was almost waiting for the 20 period, one way of looking at it, it was waiting for its 20 period moving average to catch up. Another way of putting it is that it just needed time to consolidate and absorb this massive rally. So during this pullback period or consolidation period, we then begin watching very carefully to price action each day to see if there's any patterns that develop that might present us with the possible entry point to buy KLIC. Well, in this case, what happened 3 days in a row here, this would have been the 25th, 24th, and the 23rd of May. Notice how KLIC fell into a tight consolidation range. It never got above the $11.80 mark, and it never really fell below somewhere around $11.50 mark, right in here. Now we know that we have selling going on here, we have resistance here, and we have buying going on here. We have buyers down here, we have support. So every time we come into this range, the buyers step in and hold it up. But every time we get up to this part of the range, the sellers come in and push it back down. Now what's interesting is today, the 26th of May, we had very interesting price action in KLIC. KLIC opened the day in the trading range. It opened right about here. But shortly after opening, the stock sold off sharply. It undercut this 3-day low. It 1, 2, 3 days here. It undercut that low, sold off sharply, came down into the 20 period moving average. Then it bounced off the moving average and rallied back up to close back in this trading range. And we refer to this, it's what it's known as is a reversal candle. When you have a day where it appears as if a stock is going to fall off a cliff, so to speak. It's going to just plummet and never recover. but then suddenly the stock finds support at a key support level, in this case the 20-day exponential moving average, and reverses back up into the range. That's what, of course, what a reversal candle would be. It reverses sharply and catches everyone off guard. No one would expect that after breaking a 3-day support level. No one would expect there to be a reversal. Now, what's important about this move are a couple things. One, it sweeps stops. Most investors, most amateurs, they place protective stop losses. They'll place them right below this 3-day low. So they would put them right in the zone here. Well, if you notice, another part of what we look for here is that his volume is drying up. Now, why is this important? Because as volume dries up, it's much easier for a market maker in this stock to drive the price in a given direction. Because, interest is kind of waned here. Here we had big interest in the stock, right? Huge volume. But as time goes on, people forget about it. There's less interest in it. And what this allows the market maker to do is to sort of push the stock around. And what they'll do is go down and sweep the stops that are placed too close to this 3-day consolidation zone. They'll sweep the stops, and then on a light volume day, turn right back around and run it right back up into the trading range. Now, in addition to sweeping the stops, it also draws short sellers into the trade, because we've just established a strong 3-day consolidation period where we were unable to break below this 3-day low on many attempts. So when it happens, when it does occur, it's a very obvious short entry. Short sellers will step in. More amateur short sellers will just step in, and they'll short KLIC just above the 20-period MA, and it'll be reversed on them. The institutions, the big money, will step in and buy, and the stock reverses. And of course, now that the short sellers are in that position, they must cover the trade or risk losing money. And what do you have to do when you cover on a short position? You have to buy the stock back. So their buying just fuels the move back into the trading range. Next, what we would look for now that we're back in the trading range is a possible entry for this trade on the long side. We still don't know if it's a long entry or not. We certainly we would not enter the trade while it's in this range. But what we will do is, depending on volume action and several other technical factors that we utilize, we would look to potentially enter a long position, purchase KLIC on a breakout above this $11.80 resistance level, which was this previous 3-day high, or still is the 3-day high right here. If you enjoyed this presentation and analysis, please join us at www.morpheustrading.com, where you can sign up for your free subscription to receive an analysis like this every day. Thank you for joining us today.